Hello everybody, and good morning, good welcome to our latest Bath Life Business Surgery, financial planning in our emergence from the great pause with our friends at Unividual. I hope this all finds you well. My name is Greg and welcome to this latest Bath Life Business Surgery. The aim of these sessions is to provide free, helpful, practical, expert advice because in truth we could all do with advice in these times. This pandemic is doing many things for our businesses and our teams, but one emerging trend is that many business owners, us very much included, are having to think carefully about the judgments that are right for their businesses, their teams, their customers, and their suppliers. These are days when doubt is uncomfortable, but certainty is absurd. Still, we all just have to get on with it, don't we? And at the bedrock of what we're doing is, of course, financial planning, of figuring out what is the right structure for our business and what is the right budget expectation in the months to come. We'll be discussing, amongst various topics, exit strategies for businesses, effect of various budget changes and government strictures, maybe distressed assets, selling or buying, the various schemes that are available, the stamp duty effects and so on. But also discussing how difficult it is to plan when so many factors keep changing and so little is known. The future is unknown for all of us, more so than ever previously. For example, close-up beauty was due to be starting again recently, postponed. Likewise with the casino in Bath and of course elsewhere, postponed for now. And there have been fresh calls over the weekend for the furlough scheme to once more be extended. That in a sense that keeping businesses afloat through JRS has been superb, but sinking within being so close to the shore is the same as sinking mid-journey, worse in some ways. And of course, none of us wishes to give false hope, but there is great logic in doing something with that furlough scheme, maybe on a sector-specific basis. Again, we'll be talking about that, about trying to work out what the vagaries of planning are when you have so many different external concerns, which we simply do not know. Before today's business surgery, a retro plug, if that's a thing, for the Bath Bull. If you missed our Bull's Aid fundraiser last Thursday, headlined by Bruin Dolphin, with all manner of malarkey from Russell Howard, John Richardson, David Suchet, Chris Marshall, and more. And fret not, because you can watch it all on YouTube, on the Twitch channel, and also check the Bath Bull social feeds as well for that link. It's your chance to see. And even better than watching, of course, there is still an opportunity to donate. So far, the businesses and people of Bath have raised just over £20,000 via Bull Aid for the charities of Bath, which is utterly superb. But for the remaining week of this week, we will keep the channels open so we can take more donations if you wish, and if you can, of course. A few last points before we get going. The next business surgery will be on August the 17th with Ojo Solutions about digital strategies. Should be a really good session. We have a very special first-time combined Bath Life, Bristol Life, Cardiff Life and Exeter Living business club this Thursday at 11 o'clock with an extraordinary speaker, Anthony Gruppo, the UK CEO of Marsh Commercial. The format is very much in conversation with, covering motivation, management, strategic thinking, and the benefits of teams thinking like owners of their businesses. Having interviewed Anthony before, I can strongly recommend this. He is a man full of interesting and dynamic opinions, challenging opinions at that, which will benefit anyone at any stage of their business career. Please also remember that Bath Life is returning once more on August 28th. That first issue is set to be particularly high profile. We're having a marketing campaign over the next couple of weeks to really boost it further. It's quite clear the support and thirst for Bath Life coming back has been tremendous, and we're really gratified with the support that we've had. But please do consider coming in, particularly for that first issue. The copy deadline is August 14th, so 2 weeks to come. Let's come on to financial planning. And we'll cover anything, as I say, from cash flow forecasting, refinancing, all the loans and schemes and so on. I'll be interviewing 2 speakers from Unividual on your behalf, and we'll bring in questions during it. If you see the little Q&A button at the bottom, please ask them if you wish. You can ask them anonymously, because some of these may be slightly difficult, certainly in terms of any restructuring of teams and so on, and indeed potentially sale of a company. Our 2 speakers today, Cherie-Anne Baxter, Marketing Director and part owner of the company, was founded in 2000, Unividual was founded in 2000, and Cherie-Anne runs it alongside her father and brother. So she very much understands the dynamics of family-run businesses, which so many, of course, are in Bath. She's a fellow of the Chartered Institute of Marketing as well. And Greg Harris, another Greg, a chartered financial planner, who's one of the New Model Advisors top 35 financial advisors in the UK under 35. He specialises in personal finance advice and has wide experience in business financial planning with clients across multiple sectors in the Southwest. And we'll be discussing some of those case histories to see what it is like, what sort of advice their clients are seeking right now from Unividual. Let's bring Cherie-Anne and Greg forward, if we may. Good morning to you both.
Morning.
Are we well?
Yeah, just about. It's a nice weekend. So thank you very much. Good morning, everyone.
And no doubt boning up in great detail on all the latest changes to all the latest thinking to budget structures and so on. So some of which, not all, we will come on to. So Cherie-Anne, just set the scene a little bit about Unividual itself. What are you best at as a business, and what are the things that you don't do that are nearest to your core activities? Where does Unividual sort of stop and start?
So I guess what we're best at and why we're unique is we actually do lifetime financial advice across all areas of your finances. Predominantly our business was very face-to-face driven and run. Pride ourselves on building rapport and relationship with our clients. So it's been quite a challenging environment recently for us to work in as a company. And then other areas of our business that we excel in are recruitment, marketing. We've built our own in-house academy to train financial advisors up right from grassroots through to being fully qualified like Greg. So lots of different aspects to our company really, and why we're unique.
And what don't you do? What's the sort of the nearest next thing? I'm just trying to work out the edge of the business, and presumably you partner with us to supply various services.
Yeah, so obviously we don't directly supply products. So we're, I guess you could call us that middle business in between, facilitating the relationship between, say, someone that needed a mortgage. We would provide the advice on that. And then the actual mortgage product provider would provide the product. So that's the edge of the business. And we deal very much in personal and business advice and planning rather than actually putting the product in place.
Yeah, and the personal crosses to the business in so many cases with owner-occupied businesses and so on, I guess. So.
Yeah, so we have big global corporate organisations that we work with on shareholders agreements, and structure, but then we also work very proudly with small businesses and sole traders. So perhaps somebody that provides a training consultancy within the local area. So we're not the kind of company where, how do I put this correctly? We're not snobby about our clients. So we're not looking for clients necessarily who are uber wealthy all the time. We're looking to help lots of different variety of people.
Give us a flavour of the mood of your clients. I mean, clearly in current times, the range of outcomes is very wide-ranging, dependent on which sector people are in, what exposure they have, what life stage and so on. But nonetheless, as a barometer, how would you say your clients are in terms of fear, optimism, doggedness, whatever it might be?
I think at the start, like everybody, clients were at a high level of fear, mainly because of the unknown. I think a lot more experienced clients that have been investing or working with us for a very long time understand that we'll explain to them the situation and essentially hold their hand through what's quite a difficult time. I think some of the younger clients that we've just started working with probably are a lot more fearful because this is the first time that they've been through what effectively feels like a recession to us all. But over the last, I'd say 8 weeks, things have started to pick up with clients. They've started to go back to work, started to open their businesses again. And I think as people start to get a bit more normality, there's that ability to start to say, okay, let's put the fear aside. Let's look at your existing plan. How do we adapt it and mold it around what's happened? And is there anything we need to change? I think when people start feeling a little bit more rational about things, you can start those decision-making processes again.
People start being a bit more rational. I guess rationality is the most difficult assets in current times. Bloody hell. In part, who knows? But ultimately, I suppose all business comes down to the basic precepts of managing what you're doing, promoting what you do, selling what you do, and managing your costs as tightly as possible. But it's easy in outline, but it's tricky in practice. For
really hard, yeah.
So tell us about you as a business. I mean, how have you been performing? Are you on track to hit your forecasts?
So I think every business is unique. I think the industry as a whole that we've been operating in, our industry has been hit quite hard. At the start, we had to do a lot of support for clients in terms of hand holding and rightly so, and sort of taking them through what's going on in the markets. And because of that distracts you away from necessarily bringing on new clients, and then you haven't got that pipeline of business coming through. So at the start, there was a little bit of a stagnation for us, and because we have such a long pipeline, it can take us anything from 3 months to a year to convert a new client into actually receiving physical fees for it. So I think for us, the scariest part in terms of incomings will be around September, October, November. But having said that, we noticed that straight away, right from the get-go, and we've been planning in and around that, which is why we've ramped up our marketing efforts. We're doing online digital marketing at the moment, a lot of SEO on our website and pay-per-click with a company called SearchStar in Bath.
Very good company called SearchStar in Bath. Well, good friends.
You know, I think it's about spotting what those trends could be and doing absolutely everything you can to steer your business around them. At the start, your main goal is survival. Once you've got over that and you think, right, come on, it's not just about survival, it's about how do we make the most of this opportunity, you can start to spot gaps in the market and opportunities that you perhaps may not have spotted prior to COVID happening.
Tell us about a practical point for you and what you're seeing in other clients and other businesses and so on. How have you been preparing for the return to work physically in terms of the office space and so on? And what's your rough chronology in people timescales?
Yeah, so we have 20 people in our business at the moment, spread across 2 offices, one in London and one in Bath. The office in Bath is a lot bigger. We have around over 50 members of staff in Bath. We returned to work, I think about 4 weeks ago, but I can't remember because it's all been a blur, to be honest. And I think we've been preparing our staff to come back to work as soon as the pubs and the restaurants opened, not because we wanted pub lunches and to go after work, but more that our viewpoint was if it's safe enough to sit down and have a meal, then the environment we can create in our own office could be safer even again. So we spent quite a long time speaking to our staff, communicating them, getting them on board with that. And the feedback we were getting back from them was we want to go back to work. We feel isolated. We've got a very team-driven environment and culture in our company. We also have young people who are learning a lot in a very short space of time. So being at home makes them feel like their careers are on hold almost. They can't.
But let me just play back to you. It looks to me, not knowing such things, that both you and Greg are sitting at home. You're not in the office. So are you back at work or what?
So we are back at work as a business. I live in Worcester, so I work from home regularly anyway. And Greg today is working from home because he wanted to have a quiet environment. And
yes, cool. Well, fair enough.
Lots of noise and buzz.
I'm only marginally teasing. I'm just trying to work out what physical return to work looks like. I mean, have you had to change the office round and so on?
Yeah, we're quite lucky in the sense that we're at a building called Sterling House on the Upper Bristol Road. It's quite a big building. It's very spacious. We've got wide hallways and corridors. We've got lots of rooms within the building. So our meeting rooms are out of bounds at the moment, and we've spread our staff across multiple rooms within the environment. The advisors at the moment are conducting all of their meetings on video, and because the meeting rooms are out of bounds, they're working from home a lot at the moment, just to have that privacy for client meetings.
Nice. Well, we're going to launch a little campaign with Bath Life under the hashtag Show Us Yours. 30-second films of what people's offices look like, because there's something quite intriguing. It's one of the sort of the great levelers of this pandemic. We're all having to work out what our physical space will now be looking like going forward. So look out, hashtag Show Us Yours. It was decided about half, so it's not exactly a major campaign just yet. Right, let's come on. When you're talking about that working in offices, and this obviously very much applies to Greg as well, what guidance are you giving to your teams, and how are you approaching it when visiting your clients' offices? Is it inherently different?
Yeah, at the moment we are not conducting face-to-face meetings. That's something that we're reviewing. We have some clients who need face-to-face advice quite urgently before the year is out. So we're looking at that, how we're going to conduct that. We're not in a position where we can invite clients into the offices because we feel that that could be putting both the client and our staff at risk. But also the sheer volume of cleaning that needs to happen after every meeting could get very costly for us.
But what's your time horizon on that for face-to-face meetings, either in or out?
Well, we were feeling quite confident at the end of last week and had a meeting to look at rolling out some changes. And then at the end of last week, some new announcements came out in the press about shutting down 30 cities in the north and things like that. And then you think, well, are we doing the right thing? You know, should we be making those changes and loosening things at a time when the media is portraying that things are going backward again?
Well, I mean, speaking as a notional representative of the media, I would actually put a distance here. It's not the media, it's the government. The government is having to make changes because they're realising the rate of the pandemic has actually started increasing again. So Johnson's expression about foot on the brake is perhaps timely. And so I think we've all got to be cautious. And I think that then comes into today's discussion about business planning. Which is, you're saying, you know, as on Friday you're thinking this and on Monday you're thinking that.
Yeah, and that's, you know, I can't answer your question because you have to take each week as it goes, and not only protecting the safety of your staff and your clients and also the wider community around you, but you're also trying to protect your reputation and do, from a corporate social responsibility point of view, do the right thing. And it's
talk about government. I want to pick up one specific area, and we'll talk about some other policies as well, and how that then plays out for you, your clients, and so on, which is about business rates. That, I mean, just as a quick recap, I think this is right. The business rates have been abolished for only some businesses, or at least for this year, as a business rates holiday. You just talk us through the detail. Up to 51,000 there are no rates.
Yeah. So if you have a rateable value of under 51,000, you will have a business rate freeze next year. If you're in the leisure, hospitality, and retail environment, so that only applies to those businesses. But what's quite difficult is there are a lot of businesses that are small that are actually in a managed service environment. For example, our London offices. So you can't apply for those kinds of relief, which is difficult for smaller businesses. So they've also issued out a £3,000 grant for those kinds of businesses. So it's really important that you speak to the people that you're renting your office space from and see if you can get them on board to actually apply for those grants on your behalf or apply for them yourself.
But if the total rateable value of the building, even if you only occupy a small part, is over 51, then you're out anyway.
Which is the case of our building, for example, but we're not in the retail or leisure environment either. So unfortunately, but you know, it's not a bottomless pit of money. And I think as business owners, we have to appreciate that. Yes, it's been difficult for us in financial services, but I can't for 1 minute imagine how hard it has been for a coffee shop owner who's got the overheads at 100%, but can only let out 3 seats at any one time.
Yeah, I just want to ask this about from a sort of taxation point of view, because it's effectively, it is another form of tax. That most taxation doesn't work on quite such a cliff edge basis, and this is 51,000 and under you get 51,000 over, a penny over you get nothing. Joe Cousins of the Bath Pub Company has been particularly eloquent and vocal about the iniquity of that system. Just from your point of view, do you think there is any prospect of that structure being changed, given that it is inherently unfair if you're just over that hurdle?
Yeah, it does feel unfair because as a business, we've been able to qualify for very little ourselves. So I completely understand where he's coming from. I think also it's very difficult for the government to put parameters in place that are measurable, but also you can imagine the cost of administrating all of this is huge. So I think they tend to set these parameters because they can't think of another way how.
Yeah. Let's come on to one other area I touched on at the beginning, which is the furlough scheme. And again, as you're saying, almost every day brings a fresh perspective. And there are very strong calls, just as there have been at 2 different stages in the early part of the pandemic, for the furlough scheme to be extended or tapered in some way. Because come what may, however useful it's been, it has delayed rather than eradicated the prospect of unemployment and redundancy. Greg, do you take, is there any belief at all, and would you advise clients to imagine there might be any prospect of the furlough scheme being changed in any way?
It's very difficult to see. I personally don't think that they're going to have future extensions to it. I think your point about delaying for some businesses what potentially is the inevitable of reducing staff numbers or having to close doors, unfortunately, altogether, that at some point that's going to need to happen. And unfortunately, I think, certainly when we're talking about these sort of conversations with clients, it's very much, well, look, that's your best case scenario in some circumstances. So plan for the worst, hope for the best. And that doesn't have to be a negative. That can be often a very positive viewpoint sometimes, because if the more positive position happens, then your quid's in, so to speak.
Yeah, it's I suspect the drumbeat will get louder and louder as the numbers go higher and the fear gets worse, and we'll see how that plays out. None of us know, of course. In a broadly similar area of governmental support, the Sybil's loan scheme has been very widely welcomed. I just want to ask a couple of points about that. Can companies make fresh claims or new claims now? Is it still open? And separately, can you make an additional claim if you've already got a loan of X amount, you suddenly realise you need a Y amount on top? What are your thoughts?
Well, I think it's always worth speaking to the banks themselves. I apologise, there might be a bit of feedback on my volume, with apologies. So each bank is deliberately purchasing tranches of capital there. So definitely speak to them. If there's additional capital that you can do, then definitely do so. One sort of word of warning, which has only recently come out through actually sort of practically doing this, is when you've got small businesses where you may be a husband or wife or a few directors are taking out these loans, it's actually having now a slightly negative impact, although it shouldn't, on their affordability from a mortgage point of view. So I know that a lot of businesses have been using this almost as almost a cash flow positioning. They may not need it, but it's there if they do. So it's just a word of warning if that is the case, to those that are thinking that kind of remit.
Yeah, so no sooner solve a problem here, but it creates a problem elsewhere, perhaps, but at least for some people. And so as a whole, would you advise businesses, partly given that comment, to go larger in terms of what they think they might need because no one ever quite knows, or to be much tighter in simply on the basis of what they can imagine repaying?
I think it's probably a good one for Cherie-Anne as well from a business point of view, but I think really it's having that best case, worst case scenario thought process. If you take more, yes, you're going to have the benefit of, if you did need later down the line a little bit more capital, it's there. You don't have to apply for further borrowing. But then think about your own personal circumstances. Make sure that you're tidying up any personal areas which could be affected before you're taking out those loans, if possible to do so in the timeframes, because then you're buying yourself more time.
I read a piece of analysis at the weekend saying that whilst most companies fully plan to repay their Sybil's loan, about 10% do not expect to be able to, not at least the full amount. And Gut says that if 10% are saying that they don't expect it, there'll probably be a few more who think that, and then a few more also who simply can't because the world changes. So there may well be quite a delta there in terms of what the government's exposure is, but who knows. Let's talk about a couple other areas of business. Credit control is such a key area of business, that the debts that are out there. Have you been asked for advice about the credit control process, about how hard, how early to go legal, how soft, how considerate to be, and so on? How sort of manage that, on the one hand, relationship, because of course we all wish to have the same relationships with people going forwards, and the other, the need to get cash in right now. How about that as an area for your clients? So
locally speaking, I think, and it actually came off the back of conversations that we had when we last spoke, it's about being responsible to each other and having those open conversations at this stage. Very few are having to engage in legal processes at this stage, but again, maybe later in the year, October, November, that's as businesses really do start to struggle, that's probably going to be when that comes into play. But I think at the moment it's very much, when you're working with local businesses, the person that's taking out the service, making sure that you're able to afford it, and if not, having a very open conversation, because, albeit, let's say you're putting on something on a one payment as opposed to then maybe across 3 or 4, the businesses, both of which, you know, the receiver and also the person taking the service are going to be at benefit there. So I think we've got more responsibility to each other on a local basis than ever before. And I think that's something that we need to continue. So those are the main conversations at the moment.
I think that point about the smaller city civic responsibility, that we are all connected and our cash flows, we're all part of each other's cash flows essentially. And if we're not paying, we're not getting, we're not able to spend, and it will have disproportionate impact elsewhere. It is tough, but I think we should, you know, give a sort of a virtual round of applause to all the credit controllers out there, because they are having a tough time trying to get that money in when they know the exact problem the other end of the phone or the emails, that people just, you know, they query if they've got the money to pay. But I'm going to come on to a more problematic area, which relates to the furlough scheme, which is about redundancies. I mean, clearly when you're advising companies about their business planning, about their cost base essentially, and for some businesses, people will be the most significant cost. You find yourself sort of caught, or at least your clients caught, between two lures. One is to go early, because it is better to have certainty. It may paradoxically be slightly kinder for the people involved, because there's a longer time in which to at least try to get some other job. However, there's also morale issues potentially as well. Or go later, but the job market may be worse and the cost of that will rise. And on the morale point, the troops are often ahead of the generals. And they know something's coming. How do you advise clients through that process?
With great difficulty, in all honesty. It's like you said, you've got that absolute dilemma, and usually, especially with smaller businesses, your attachment to your staff is all the more greater. So it does become extremely difficult. I think really it comes down to industry specifics. I think if you certainly look at tech businesses now, you know, employers in some tech businesses are absolutely thriving, understandably so, especially if you look in Bath. And I think if your industry is is having success, but maybe you are an anomaly within that industry, then I think it's fair to let your staff go probably sooner rather than later, simply because they're going to have those opportunities. But I think, again, what we say to business owners, we can come at it from a purely financial point of view, and we can look at the cash flow in position, and sometimes it's a must. But you know, the grass is always greener. I think you're absolutely right. Employees, you know, if they're laid off sooner, they wish they'd been held on for longer, and likewise, if they've been told go out and find something, start having a look because it's inevitable, you know, they then worry and then they can't find anything. So I think from experience, I mean, my wife was made furlough and is almost certainly going to be made redundant, and I think her being told that beforehand gave her the flexibility to be able to go and have a look and see what is out there. And I think, you know, at the end of the day, we're all adults. Sometimes decisions have got to be made, and provided people are making them legally and responsibly, which again, two very big factors, don't get me wrong. I think most people understand later down the line.
Cherie-Anne, your thoughts here about that balance between business need and culture, responsibility. As Gregor says, in smaller businesses, there's likely to be a closer attachment to people, but ultimately business has to find a way of navigating. How do you advise?
Yeah, I mean, I'm lucky that we haven't had to go through that as a business yet. But I think I've read quite a few case studies in and around this and how businesses are approaching it. I think the ones that are taking more of a communicative approach, involving people in the decision making, and then helping those people to find work after it's happened, are the ones that are coming out with perhaps a better reputational outlook for the future. I saw on LinkedIn the other day, I'm really annoyed because I've just been for the last 2 minutes trying to remember who it was, big company, who had actually put a database together of all of their staff that they were being made redundant. All of their CVs and contact details were on there, and you could actually log on to this database, search for them, and then ring them up and offer them a job. So I think involving staff is really important so that they understand what's happening, and then trying to help them find work afterwards.
Yeah, and I think that latter point is really well made, and companies' responsibilities sort of don't stop just because people have been let go. It is this, we're all connected one way or another. In a very perhaps a minor way, we did with Creative Bath, which is a separate community interest company. We've used that as a platform to promote those within the creative and tech sector who have sadly been made redundant, precisely because there is business out there, and we all have that sort of remaining and enduring duty of care to help people where we can. I guess that's part of the thinking. Let's come on to the strategy of businesses. Strategy may feel rather grandiose in days when it's all about tactics. It's all much, much shorter term. But do you find that you are able to keep the business owners looking upwards, looking ahead, looking mid and longer term when they are looking downwards and inwards about the day-to-day, week-by-week cash flow? How do you manage those time horizons with your clients?
On a regular basis, from my point of view, there's also the mentality at the moment is certainly more positive than it was March, April time, which you would expect. Let's be frank. But that enables people, using your analogy of, rather than looking down all the time, they are now starting to look up to, not the long term, I think that's probably not fair, but certainly the medium term. And I think also, when we first went into this situation, we were talking about a V-shape or a U-shape recovery. I think it's pretty clear now, if you read most commentators and also how markets have responded, we are now into a U-shaped recovery. The V-shape is probably a long distant dream, unfortunately, but that has enabled businesses to plan for that longer term recovery as opposed to the jump back up, or everything's going to be back to normal in October, November.
Well, that au contraire, as they say, that V-shaped recovery was exactly what Andy Haldane, as Governor of the Bank of England, was saying just on July 20th. I checked the date. That's only 11, 12 days back or some such. He was saying then, and he is about the most senior economist, at least in the public eye, that we are set for a V-shaped recovery, which personally seems much too vigorous and much less likely. And even the expression bounce back appears a bit too energetic. That Bath appears set for a rising change. Is that how you see it, or do you think there is any prospect we are all going to be in a better position than we imagine come January, March next year?
Again, I'm very happy to be proven wrong and would love to be proven wrong, but I think the more sceptical side of me is saying no. I think what we've seen, and I suppose where we've got benefits, yes, when big people in big positions are making sort of generic, sort of systematic, sweeping statements. From our point of view as a business with our clients, we're seeing things on the ground. And I think Cherie-Anne mentioned, we were having a conversation last week about one of my clients who is in the hospitality sector, has tried to pivot, tried to do sort of takeaway cocktails, takeaway food, those kind of things over the last few months, as a lot of businesses have. And I spoke to him and I said, "Oh, you must be ecstatic that you're back to normal." And he said, "Well, not really, because I'm working at 90% cost, 95% cost, if not 100% cost, and I'm only working at 30% turnover." So I think when you look at those statistics and the fact that last week we had some fairly negative news about the ability to, as Boris said, putting the brakes on things, I just can't see personally, as much as I'd love to be proven wrong, how that V-shape is now possible, certainly on a micro basis in somewhere like the Southwest.
Well, we of course all want to be realistic, but I will just fly the flag of positivism just to this extent. I won't name the person, but I had a good conversation with someone on Saturday morning who was saying, and they're in the hospitality sector, they're saying that they're almost embarrassed to admit it, that their business is up year, July compared with last July, and that they've seen a sort of modulated business during the week rather than being spiked towards the end of the week as hitherto. Who knows? There are some glimmers out there, and we shall all see what we shall see. But I guess we've got to be both realistic, but also take the positives when they are there, and share the good stuff, which we've been trying to do with Bath Live throughout this. Find the good things that people are doing and share them with our hashtag Bath Together. Let's come on to a slightly longer term point, which is about exit strategy, which this brush with mortality, personal or corporate, has given many of the people the chance to think about. Is it ever too early to be thinking about exiting your business and to be planning for it? It's not just thinking about it.
It's a question that I can see Cherie-Anne smiling, so I'm going to pass on to her in a minute. But the answer is no. I think that the benefits of working in a small business, whether you're senior management or owner occupied, in that sense, you need to plan. And I try to have the conversation with clients when they've just started up a new business. What's the longer term strategy? Are you planning to, run this business to earn a living out of it, hopefully earn some good money, and then just let it fizzle out when you want to retire? Or do you want to have a business that is then able to be marketed and able to be sold? Because they're two very, very different strategies. You need to run those businesses in very, very different ways. But actual planning for whatever eventuality that is, is something that, as a business, we get a huge amount of inquiries for, which I'm sure Cherie-Anne can mention. But also it's the sort of planning of, the what ifs at that stage, but also later down the line. If you want to sell, what are the impacts of us doing that? Or if you want to bring family in, what are the impacts of doing that? There's so many different avenues that you can go down with this. It's something that we get a huge amount of inquiries for.
And you say a huge amount of inquiries. Are you seeing a pickup in recent times that people are thinking, you know what, I've got to work out a longer term plan here that they've never had to previously?
From a generational point of view, yes. So clients that you would typically expect to be at the later stages of their career, yes, we have. But interestingly, something that wasn't necessarily as expected, we've seen a number of our corporate clients who have weathered the storm fairly well, that are in a quality position, and they're looking for value opportunities in their sectors and in their marketplaces. So I think over the last month or so, we've had a couple of businesses that have come to us and said, I'm thinking about buying out one of my competitors, which is a fantastic position for them. So there are winners in this situation. It's just the way in which they conduct themselves then to go about that.
But is now a good time to be, frankly, either buying or selling? That given there are so many doubts about trading, let alone valuation, it's tough to work out what multiple or metric might apply to value.
Yes, I think so. When we look at this, when we have conversations with our clients about these matters, we look at the wider sort of UK economy and global economy as a whole, and then sort of filter it down. At the moment, most, and yes, you are going to get people on either side of the fence, most will say that quality businesses, and when I mean quality, I mean good cash balances, long track record, they're set up to weather financial difficulty fairly well, versus those which may have a value attached to them, which is an opportunity, so maybe not as healthy on the old cash flow point of view, and could potentially face difficulties. So I think businesses which fall into that quality category as opposed to value category, they are in the position where they can. We've got to look at the wider thing, wider position, really. And that's businesses still are trading, businesses still are making money. And as long as that continues, which, if it doesn't, without sounding negative, we're in bigger problems, then businesses still need to continue to be bought and sold. To some level, maybe not at quite the volume at which we used to, but at some level there needs to be some continuation there. I guess
the other thing that's driving that potentially is the huge amount of capital that there is out there in the system, and money has to find a home. Money isn't, there's no point in money. Money has to have a use. And the stats out of the American public markets, and I know that feels quite distant from what it is to be trading in Bath, but everything does connect. They've just had a record quarter in terms of the public funds raised, because money needs to get value, and it will wash through. But I guess it may well be that more deals might be contingent, whether it's earnouts or deferred payments or whatever. Are you beginning to see that yet? Because of doubt, therefore you make value contingent?
Yes, and I think that's sensible. I think that's in this situation that we don't know what's going to happen over the next couple of months, and going back to that V or U-shaped recovery, people that are trying to target value in the markets, they are crossing their fingers for a V-shaped recovery, because they're going to be able to recoup on their investment fairly quickly, whether it's purchasing another business or actually investing into markets full stop. But I think if you're a business owner looking at potentially disposing or even purchasing at this stage, definitely look at spreading that out over a year or two, if not even longer, because client bases may change, distribution may change, there maybe need to be pivoting involved full stop. So there's all those factors which don't make it as cut and dry as previous.
There's a slightly, you've touched on it already, but slightly sort of uncomfortable expression for some, which is distressed assets. And in reality, if people need to sell or wish to sell, then it takes two to tango. You need a seller as well as a buyer. Are you getting companies coming to you saying, you know what, we have excess capital, or at least interest in buying? Bear us in mind if you hear some other clients who might be interested. Is that part of the offer that you have, the sort of relationships you have?
So certainly the conversations that we have, and we've built the business basically on networking, whether it's within existing clients or through facilities like Bath Life, etc. So yes, there is always the ability to put people in touch. It's not something that we would actively encourage people to say, look, we've got many, as an example, we've got many businesses in the tech industry we'll let you know if we can. So we don't really sort of focus on putting people together from that point of view. But if an existing client comes to us and says, do you know anyone that ... then if the answer is yes, we can put people together, but it's not something we actively, I don't know, correct me if I'm wrong, Sharon, that we would actively approach.
Yeah, we don't market ourselves on it, but I can think of 2 scenarios last year actually where we had quite a large business get in touch with us about looking for investment. And obviously a lot of our clients are interested in investing, but also some of them are on the more riskier side and would be interested in taking on challenges like that. So we do have an interesting ability to connect people, and I can definitely think of 2 last year, but it's not something that we market as a service essentially.
Do you think sellers are realistic in current times? Are their aspirations too high?
Are there what, sorry?
Are their aspirations, their sense of value in their own business, actually too high?
Yeah, I definitely think that's commonplace. I mean, this subject makes me smile because my dad once said to me when I was very, very young, when you open a business, from the first day that you open, you should be planning on what you're going to do with it at the end. It sounds quite odd opening a business and thinking about how you're going to sell it at the end. But when you look at how long it takes to build quality within a company and a reputation and an image to then sell that company, it can take 5-10 years to build that up. So I think business owners get very attached to their businesses, rightly so, because it's your baby. You've been with it from the start. But I think it's really important to have someone outside of that to look back and say, look, this is what we think you should do, and play that devil's advocate role and make you ask the right questions.
Well, let me play a devil's advocate role with you as Unividual. So what's your plan then? Have you heeded your father's advice to plan your exit before you start, or?
So my father started the business 20 years ago, and he has not decided to sell the company. We are growing it. We have no plans to sell. Because what we're doing is so much fun and we're enjoying it so much. But there will come a point where my dad looks to retire, and we've already planned for that. We've restructured our organisation and have some exciting things on the horizon. But I think it's important that people start their business and think, well, I am going to retire at some point. Not many people can work until they're 90 years old. So if you rely completely on your business's value for your retirement pot, that's quite a risky approach. And it's really important to have someone to look at retirement, what your business is. And I think now with COVID happening, a lot of people have realised, is my business worth what I thought it would be? And is that going to affect my retirement in 5 years' time? Which is why you see a surge in inquiries with support.
Yeah. Good. Yeah, I'm not really intruding on your own private stuff. I was merely being cheeky. That's all.
I know, Greg. I hope my answer was
very, very deft. I thought very hit straight back down the wicket. Let's come on to one other governmental point, which is about the stamp duty effect, which primarily, of course, is to help kickstart the relatively moribund then residential property market. It's had a propulsive effect. Record numbers from estate agents. Terrific June, but a yet stronger July. And it looks as though it's had that effect. But let's talk about it from a business point of view. Forgive the expression, are houses as safe as houses when it comes to an investment proposition?
Greg, I know, is going to enjoy answering this one.
Sharon's got some really good information on the sort of the position of the housing market as a whole. Look, we have got this, but going back onto your question of from a business's point of view and property full stop, I think I'm going to try and be diplomatic with this one. Look, we've got a position in the UK where we just have an affinity with property. We love it. When we're younger and starting out our careers, we can't wait to get onto the property ladder. If we speak to parents and grandparents, if you've got extra money, you buy a buy-to-let property. Look, there's obviously value there in the markets. It's just the difficulty in viewing the alternatives that are potentially there. Look, that we know that there's been a real need for first-time buyers to be able to get themselves onto the ladder. And if we look at the market as a whole, which I know Cherie-Anne can come on to, but it's been saturated by property investors, portfolio landlords, all these kind of things, which over the last couple of years, we've seen an increase to stamp duty on second properties, which has had a small effect. But I think now with the positioning, we're hopefully going to see more landlords coming out of the market and looking at alternatives. And again, goes back down to that value. There's probably, more value now in equities, stocks and shares, businesses than there is in property, because the equity market has dropped off so much more than the property market. So if you've got capital now, you're looking for returns, you're probably better off sticking it into some form of equity-backed investment as opposed to property. And it's also the taxation point of view. I know we work very closely with accountants on this. There's some, when you're looking at property, whether it's commercial or residential, and you're looking at to produce some form of investment return, there are certain taxes which you just can't avoid or sort of get around. So in that environment, it's quite restrictive. It's also typically a very liquid asset. So there's lots of benefits of property, don't get me wrong. And there's my diplomatic answer. But there are far better opportunities out there if investment capital is something that you're looking at.
What about specifically buy to let? It's been flat probably for a year or two, but there are some signs that it is being rekindled. Is that a sector you would advise people to look at as a potential good return?
Well, I think it goes back really to timeframes for investments. I think if you're looking over a longer time frame, and again, there's a facility called gearing where you've got the ability to borrow against that asset potentially, which can help longer term returns. So with that, then yes, but also we've got to look at the markets really. FTSE's below 6,000 again, and some people see that as a negative. But if you've got capital that you're looking to grow, and we were at FTSE 100 was at 7.4 beforehand. There's now 1,400 points worth of value in just the top 100 UK businesses, let alone globally. So I think value there's more in invested environments, in an equity environment, but property I think is always going to be a safe haven for some people, albeit not as safe as they like to think.
Presumably, Cherie-Anne, go on.
I was just going to say, I actually have a buy-to-let property myself, and recently it's been a nightmare because my tenant hasn't got any money coming in. You're then in a position where they can't pay the rent, and luckily I was able to get a mortgage holiday on that property, but if I couldn't, what position would that put me in? And I have to continue letting out my property because I unfortunately bought it a few months before the credit crunch, and it's not in a position where I can sell it. And given versus investing, where I can give my money to my brother, Lewis, who manages my finances, and he will go off and invest it in the right place and it grow. I won't ever be doing buy-to-let again because of the hassle that goes with it all.
And what about Bath specifically? Is we know some of the issues we've been aired previously, of course, about the lack of affordable housing, anything like the centre or even walkable to the centre. But nonetheless, does that provide an opportunity for investors? Maybe pick up the point also about commercial property, and we'll come on to that as well.
Yeah, I mean, the interesting thing about the stamp duty situation is that, so just in case anybody wasn't aware, there's no stamp duty currently if you buy a house under £500,000. At around the value of the house at 500k, you could save around £15,000 worth of stamp duty, which, when you think about the cost of solicitors' fees or putting that as extra money deposit, you're then getting in a situation where someone was buying a house for X amount of money, they're now going to buy it for this amount of money. Or even better, someone who's sat there that's been in the house for 5 years might have thought they couldn't afford to move and now they can. I think I read in the newspaper in the Eye at the weekend that Bath was the second highest in the country for new builds since 2014. Which is great for first-time buyers, but not if you don't qualify for the share to buy scheme because you earn too much money. So as people start to move out because they decided to move, that should open up more properties for first-time buyers that aren't just new build. And as a business owner, I look at that and think it's really hard to recruit people who are first entrants into their career, graduates, etc., in Bath, that live in Bath. And we like employing local people. It has a benefit as a business, but it fuels the system and the benefits as a whole of the town. And if we can get more first-time buyers, they're going to stay in our city for longer. is going to compete with Bristol better, that's going to fuel recruitment, and that's going to mean that we've got more people spending money in our city.
Well, at the risk of overplaying a tiny glimmer of positivity, if it is the case it's going to be more working from home, the idea of the commuting time being a problem for people recruiting into Bath actually may be benefited, because if you only have to go to work 2 or 3 times a week, then that's maybe more manageable than commuting an hour or so from one of the Wiltshire towns or from wherever else in the locale. But who knows? I want to come on to that working from home point when it comes to commercial property. I think we can all argue sort of down almost 2 diametric lines. There's going to be a reduction in value for commercial property because there's going to be more working from home, more flexibility, business uncertainty, you don't have to expose yourself to long-term deals and so on. Or opportunity, because space is having to be recalibrated and changed because there are businesses which have different requirements, including companies moving from London or from elsewhere to Bath as a glorious place. How do you see, sort of trying to take all the arguments through there, net, do you see commercial property as a better or a less good investment opportunity than it would have been, say, 6 months back?
I think if a business invests in commercial property, it can be quite a high risk thing anyway. It depends the situation that the business is in. For us, we weren't in a position where we could afford to looking at purchasing premises, so we have a 10-year lease on our office. We've made it very clear that we are not a working from home business. I think there's lots of large companies out there that might look at this and say, you know, we don't have that type of culture that we need to fuel. Could we actually work from home more? Ultimately, there will be required space still. But we know as a city that commercial property has always been a struggle for us. You know, we had to go out to Corsham to stay at Harton Park for a couple of years because there was nothing in that small to medium size for us. So it is tough. I hope it will release up a little bit more space for some of the more smaller and medium sized businesses. And I hope it doesn't have an impact on some of the newer brands that have come into our city that are providing managed service environments, because what they're offering was a necessity in our city. So I think we've just got to play it by ear and see what happens. A lot of my friends that are working for sort of big banks or large corporate organisations, the tune they're playing is we're not going back till next year. So if leases come up for renewal, I would be surprised if they're renewed. And then you're going to be left with large buildings just sitting there not being used. So it'll be interesting to see how the commercial property sector reacts to that and what happens.
Bath, as you say, has always been relatively poor on office space. There's probably 2 specific areas or reasons why there may be more available in near term. One is consequential, which is retail. Come what may, there's going to be real estate available to be purchased in whichever way. And the other, I'm not exactly sure of the timescale, is the Keys project. That will be coming online. A major and brilliant initiative led by Baines, which we can see the cranes and the work happening right now. So it's reasonably imminent, I guess. Come on to one other point, which is about later life care. I mentioned earlier about brushes with mortality, that many of us, maybe it's an age thing for me or perhaps a little bit older for others, are realising that come what may, the quality of life in later life costs money, and that may be someone in their 20s and 30s with the grandparent, it could be someone in their 40s and 50s with the parent, or indeed someone of that life stage themselves. Has that been a factor in your financial planning with clients, that to make sure they've got a store of money for that later life care?
Definitely, and I think it's rather than there's been a few leaks in the press recently about this, certainly from an over 40s positioning. We've been having conversations for decades really with social care for elderly people in the UK and how underfunded it is. And again, I think one of the key things with this area is it's cross-party. Really, I know that people have got different ways in which they want to tackle it, but it's unanimously agreed across all parties that this is a big problem. Now, one thing I will say is that if we look at what that probably means is that things may happen pretty quickly, especially with the country now in significantly more debt than it was 12 months ago. So for those of you that didn't sort of hear it, there's a social care premium that they're thinking about bringing in, similar to how they operate in Germany, which is effectively through earned income or other income, full stop. Anyone over 40 would have to make a contribution either directly into as this sort of social care premium or as part of their national insurance, both as employees and employers. So there's a potential increase there for both parties. So look, this is quite clear funding needs to be put in towards this area. It has been for a number of years. So I don't think that's really up for debate. It's more the impact on how that could potentially have a detrimental impact to businesses and the employers and also the employees in a time where money is a lot tighter than it was, even if you're a business that's faring fairly well. So one thing that, certainly if we look at Germany, what they did is to help employers, they actually looked at reducing one of the bank holidays that they had, so that employers got an extra day available to them to sort of help recoup some of that additional cost. So it's certainly something which we take very seriously. Cherie-Anne mentioned at the beginning, some of the clients we've had to see face-to-face and will have to see face-to-face are vulnerable. And they're, you're talking to families about these kind of situations where, having to move into care homes at this stage. And, we think that pension planning and retirement planning is bad enough. But unfortunately, this is one stage further. So it's a difficult conversation to have, though, because as you correctly said, you could be talking to a 25-year-old, 30-year-old about, well, when are you planning for your later life care? Likewise, you could be talking about someone who's much older. So a difficult subject to have, but a very, very important one, and probably equally as important as retirement planning for people now, just because people are living a lot older.
And just a quick couple of thoughts on that. One, I guess Germany's got far more bank holidays, so it can sort of trade the value of that in some way than the UK does. But two, the UK has only just implemented the NIC's going the other way. I think you popped some notes earlier about it. It's up to 9,500 now. So that's an effective 0.5% benefit to employees up to about, say, 25k or some such. So if anything, the trend on taxation has gone the wrong way in terms of providing a stability fund for later life care. But thank God none of us are the Chancellor. That must be the toughest gig in town. We think the Prime Minister's hard, but I think the Chancellor's got it worse. But anyway, let's see if we've got. Really, I just want to return to this thing about the overall growth or otherwise, a sort of prognosis for Bath as a city, maybe part of the Southwest as a whole. But how robust do you think the Bath economy is compared with perhaps elsewhere?
I think. Oh, sorry,
Greg. I was just going to say, I think it's very robust. I actually live up in the Midlands in Worcester, so I get the benefit of seeing different types of parts of the UK and how different places are reacting. And I think at the moment, places are reacting in a very localised, unique way based on the people living and working in the city. And what I know about Bathonians is we do not give up, and we are positive and we care about each other. So I have no concern about Bath. I know that we rely heavily on the tourist environment as well, but have all faith in people marketing our city well. I even read in apparently quite a few of our local restaurants and hotels have won awards the other day in tourism awards. So I have faith in that, but I think we just need to keep going and give the people who need the support, give them what they need, and just work hard to all be there for each other. And I think if we do that and we buy local where we can, we will get through all of this.
Greg?
No, I completely agree. I think we've mentioned it a couple of times in this, and it's also been echoed through various other business surgeries that you've hosted. I think it's a responsibility that we've got to each other. Provided we understand that we are, yes, there are industries which are struggling more than others. Let's be clear on that. But there are, most of us are struggling full stop. And we've all got to understand that and we've all got to appreciate that. And once we've got that understanding and that mentality, I think we naturally become more caring about each other and about each other's businesses as well. I know I've been potentially more negative than my usual self with this one, with apologies. But there's been a huge amount of optimism locally, but also industry specific as well. So yes, I don't think it's a false optimism either. I think, yes, we've got to play out for a potentially longer term recovery than we had all probably hoped for, but that actually is just going to make our businesses stronger. Those of us that can come out the other side of this as a collective, but also as individuals, I think we will be really, really well placed moving forward. And if we can, yes, we've got to look after, you know, your business and your family, etc. But if you can bring others along on that journey, whether it's peers or even what we deemed as competitors, then I think that's a really positive message to sort of send us out with moving forward.
It's a pretty positive message to end on, and our thanks to Unividual today, to Cherie-Anne and to Greg. Just to frame that at the end, it seems to us that this is at least part of what we're trying to do with Bath Life, the concept of supporting businesses, finding the good phrase, and particularly shop and buy local. That we really are, the more we're part of the same ecology, the more we recognise that, the more we can benefit, but also support in these tough times. It isn't going to be straightforward, but with the resilience, the beautifully inventive nature of so many Bath businesses and Bathonians, there is a route through this, and we're going to be there cheering along and acting as that echo chamber with Bath Life from August 28th, issue in, issue out, promoting the good that the city does. Thank you to Unividual today, and for all of you who've been listening, and of course all those watching on YouTube subsequently. Please look out for that special combined Bath, Bristol, Cardiff and Exeter Business Club we've got coming up on Thursday at 11 o'clock. Quite extraordinary speaker, Anthony Gruppo, UK CEO of Marsh Commercial. Our next Bath Life Business Surgery is a crucial diagnostic session on your digital strategies with Ojo Solutions on August 17th. And of course, if anyone's got practical, useful, professional advice which can help businesses in these times, please come forward. We can create a platform and share the wisdom of others, such as we've heard today from Unividual, because we all need help navigating here. Thank you for your time this morning. This has been a Media Clash production, and this has been the latest Bath Life Business Surgery. Thank you. Bath together.